Matrix and welcome to Matrix. My name is Looney and today we'll be assisting you with your exam guide for Accounting Paper 2. All you need to do to get all of your questions and comments through to us is hit us up on our social media pages, search for Matrix, as well as our WhatsApp line. All the details are on the screen. We've got a cool competition going on for you guys, so do stay tuned to get all of those details later on in the show. As always, I'm not alone. With me are Keta and Nicolene, our sign language interpreters, as well as our awesome teacher, Ashraf. Thank you so much, guys, and over to you.
Thank you, Looney. Well, guys, welcome back to the accounting program with me, Ashraf Patel. Today, our focus is on paper 2. Remember, you have 2 papers in accounting, so we've done paper 1. Now let's look at paper 2. What do we focus on? Let's go, guys. Once again, remember, it's a 2-hour paper and 150 marks. As you can clearly see here, 2 hours and 150 marks. Do you remember from our previous show, we spoke about RTFQ? Yes, that's right. Read the full question. Remember also that you are given 10 minutes of reading time, and in the reading time, you focus on your answer book. Why? Because your answer book will tell you exactly what is being questioned, what are you expected to do in the paper. So clearly in the 10 minutes, you have a clear picture in your mind. You're mapping your way forward. This is a question I'm going to tackle first, second, whatever the order. Once again, no rule that question 1 must be done first. Look at the question that you like best first, and that's the one you attack, because once you've got that one going, I promise you, you're on a high, and then any other challenges you may have will become easy. Chocolate cake. All right? You got it, guys? Okay. So now, if we look at the sections that are examinable in paper 2, what do we look at? Right? Let's go through them, and then I will go through each one with you, explaining to you what to look out for, what are the possible questions, what are the red herrings that you find, and those will then you'll be able to sort them out in order to ensure that you ace the accounting paper. Okay, so under analysis and interpretation of reconciliations, remember the word reconcile means to bring together. You are bringing together 2 sets of information in order to reconcile them. Right, so firstly, let's look at the bank reconciliation. With the bank reconciliation, we are reconciling our bank account as it appears in our books with the statement that we are receiving from the bank. Remember, there's going to be differences. What are those differences? Those are timing differences. As a result of time, there's going to be a difference between our bank account and the bank statement that we are receiving, and because of bank account adjustments. In other words, entries that the bank will record. We will only come to know about those entries when we receive our bank statement. Now we can see, right, this entry has gone directly into the bank. I need to record it. So there's information that you will record from your bank statement into your cash receipts journal, right? And entries from your bank statement into your cash payments journal. In that way, you will then update your records. Then you will look at your bank account, obviously. Once you draw up your bank account, we've indicated receipts and payments. We now go to the bank reconciliation statement. What is the bank reconciliation statement? The bank reconciliation statement, guys, is an extension of what? Of your bank statement. It's entries that would have appeared in your bank statement had they been processed. Right, now remember, you must also be able to analyze and interpret data from your CRJ, CPJ bank reconciliation statement and your bank statement. An example of this is where you have an outstanding deposit. You notice that the deposit was made early in the month, but it was processed much later in the month. Obviously, in these days, that should happen almost instantaneously. But because there's a time delay here, it raises questions. There could be a possibility of rolling of cash. What do we mean by rolling of cash? Rolling of cash means money is being used before it is deposited in the bank account. Understand, it is illegal. It is a crime to do that. So therefore, the controls that go with the bank statement, and remember, the idea of drawing up a bank reconciliation statement is to ensure that no fraud takes place. And it's part of internal control. And what's the purpose of internal control? To safeguard the assets of a business. Right. We now come to our debtors recon. What are we reconciling? We are reconciling our debtors control account, which appears in my general ledger, with my debtors list, which appears in a separate ledger, namely the debtors ledger. Understand, you've heard of the double entry, that's correct. In your general ledger, you debit an account and you credit another account. However, when you're dealing with debtors and or creditors, you are also talking about the triple entry. Haven't heard that before? Listen carefully. The triple entry means you do a double entry in your general ledger and a single entry in your debtors or your creditors ledger. Because, understand something, your debtors control account is a summary of your debtors ledger. In your debtors control account, if I tell you we've got a debit balance of 3,500,000, does that tell you who owes you money? Certainly not. Where will you find that information? You will find that information in your debtors ledger, where you have specific accounts for Tiboho, for James, for Nicolette, for Nicolene, etc. So those are your specific debtors that appear in your debtors list. Now guys, clearly, your debtors control account, as I alluded to early on, is a summary of the debtors list. Therefore, the two must agree. Now, if they don't agree, we now have to reconcile, bring together the two balances as they appear in the control account and in your debtors list, right? So now you look for errors and see, where's the mistake? Is it in my control account? Fix it up there. Is it in my list? Fix up my list. In that way, we will then be able to reconcile, and this also serves as a means of internal control. Remember internal control, once again, to safeguard the assets of a business. We now come to the creditors. With the creditors, guys, remember, there are two reconciliations. One is the internal one, and that is exactly like your debtors recon. What are you doing? You are reconciling your creditors control account with your creditors list. Remember once again, the triple entry, double entry in your general ledger and a single entry in your subsidiary ledger, namely the debtors or the creditors ledger. Okay, the same story here. Your creditors control account is a summary of your creditors list. The two have to be in tandem, they have to balance. So what do? We fix up the errors where they need to be corrected and omissions if they needs to be brought in, and in that way we reconcile the creditors list with the creditors control account. Again, part of internal control. Okay, now there's another creditors recon. I'm sure you've heard about it and you've dealt with it. Which is that one? We are now reconciling the creditors ledger as it appears in our account. That means in our creditors ledger, we've got a creditor and we're now receiving a statement from that creditor, and now we need to reconcile that statement that we are receiving with the information that appears in our creditors ledger for our specific creditor. Okay, so does this ring a bell? It should. Why? It is almost like your bank reconciliation statement. Why? You're reconciling to an external document. In other words, you're receiving your statement from your creditor. You're now reconciling that with the ledger account. Once again, check for errors, check for omissions, check for date discrepancies. What am I referring to here? The date that I'm referring to definitely is the date, the month of which you are working with. Because remember, if you are receiving your creditor statement on the 20th or the 21st of the month, all transactions thereafter are appearing in our books, in our creditor's ledger, but they're not appearing on the creditor statement, sorry. Remember, we're talking about creditors, so it's not appearing on the creditor statement, and therefore, you will now have to make the necessary entries to reconcile your creditor's statement with the creditor's account as it appears in our creditor's ledger. Okay, so that I have now summarized for you the reconciliations. Also with it is the interpretation and the analysis. In other words, you're looking at entries that were not authorized, or the ordering of goods that were not, they didn't go through the procurement policy. Remember, we're dealing with a lot of fraud, and therefore, the purpose of accounting is to check that we do, at all times, we safeguard the assets of the business. Right, let's move on. We now come to the age analysis. Now, certainly, the age analysis has absolutely nothing to do with the age of the debtor. That's immaterial. Obviously, you will do your necessary checks when a person applies for credit, and obviously they would submit their documents, etc. But the age analysis, guys, is part of internal control. What does it do? It does two things. Number one, it looks at the credit limit. I repeat, it looks at the credit limit. That means if you have given a debtor a limit for credit to the value of 10,000 Rand, then the age analysis will tell you whether we are abiding by that limit or we are exceeding the limit. Obviously, you may exceed the limit if the debtor proves that he or she is a worthy debtor and they're paying their accounts on time and you have no challenges. Obviously that limit can be negotiated. So if a debtor is not complying, then obviously that needs to be reassessed. So that is age analysis, the credit limit. And number two, the credit terms. Is the debtor complying with the credit terms? In other words, if you've allowed for 30 days credit, the debtor must settle that account within 30 days. If the debtor is taking 60 days or 90 days or longer than that, that's a serious challenge. Why? It could impact on our cash flow, right? So keep that in mind. Debtor's age analysis, credit limits, and the credit terms. Okay. We move on now to VAT, value added tax. You will find in past papers that this question normally comes for between 10, 12 marks depending, right? Sometimes it appears, sometimes it doesn't appear in the paper. But yet, you need to know, you don't just want to pass, you want an A+, isn't it? So therefore, you must know every section that is examinable. Okay, now, what do you have to know in VAT? In VAT, the basis of the question will be, one, the calculations, right? How to calculate your VAT. Remember, the secrets here, if you're looking for the VAT amount, it's 15 over 115 if it's inclusive, right? If you want the sales amount, and or the amount that we've purchased, depending on the information that's provided to you, remember, you have to use certain amounts in the calculation to find out what is your VAT amount, what was the original amount, inclusive of VAT, exclusive of VAT. So keep in mind, when you're working inclusive of VAT, you always use in your denominator 115. Why? Because 100 plus your 15% VAT will give you 115. So if you want the exclusive amount, 100 over 115. If you want the VAT amount, if it's inclusive, 15 over 115. Okay, and in your VAT, basically, what you need to know is whether you are owing money to SARS, whether they are owing to you. So you look at input and you look at output. Got it? Great stuff. So work through your past papers on VAT and you will then be able to see exactly what is required. Okay, now we come to manufacturing. In manufacturing, let's look at the broad concepts. What are you supposed to know? You're supposed to know the production cost statement and the relevant notes, right? That means direct material note, direct labor note, factory overheads note, finished goods stock note. Those are important. You must know how to do them. Then your production cost statement. You also need to know your income statement, the abridged format. Please make sure that you know that 2 expenses go to your income statement. What are they? They are your selling and distribution and your admin cost. Those 2 cost accounts go to your income statement. Then obviously, analysis and interpretation of your cost information. You need to know, very important, how to calculate the break-even point. Okay, guys? Now, clearly from this here, you can see that it is important that you plan yourself in terms of your preparation, right? And then you also have your analysis and interpretation of cash budgets, as well as the analysis and interpretation of your projected income statement. Here again, you need to know all the aspects that fit into the cash budget, namely debtors collection, creditors payment, and the actual cash budget. Okay, we've given you an overview of the topics. So, in order to know more, you need to stay with us. Take a quick break, and we'll see you in a jiffy.
Thank you, Ashraf. Guys, we're going to take a quick break, but don't go anywhere. We'll see you straight after this. Welcome back from the break, Matrix. If you've just joined us, we are doing your exam guide to assist you prep for the upcoming exam. If you're someone who's constantly running out of data, then this next competition is just for you. Matrix brings you the hashtag WazoWinner competition, where 2 lucky matriculants stand a chance to win 2 gigs of data. All you need to do to enter the competition is go to the Facebook page and all of the details will be there. Thank you so much, Ashraf. Over to you.
Thank you, Looney. Yes, man, I've just been reminded that it seems so daunting that there's so much to prepare. But remember, guys, don't fear when Ashraf is here. Right, so we're carrying on with a breakdown of the paper, and now we're looking at your internal control processes. Remember, when you're doing your internal control processes, they apply to cash. Remember we spoke about that when we did the bank reconciliation statement? And when you're dealing with fixed assets, your control of your fixed assets. Remember in our previous show, we dealt with asset disposal and fixed assets in detail. So then you can apply that in this paper too as well. Then your control with regards to inventories. Okay, we'll talk more about inventories when we come to that section. Then obviously we spoke about debtors and creditors, control over debtors and creditors. Now what's very, very important? Try to know that in accounting, you're going to get integration in your paper. In other words, you might find that there's a theory type of question or a data response with regards to inventories, or something dealing with fixed assets, or something dealing with cash. You must be able to answer at any point in the paper. You're going to get those responses, and we normally refer to them as theory questions, but make sure you understand the nature. You are given a scenario that this is what's happening. For example, we noticed that the deposit on the cash was being delayed, and obviously that is an indication of rolling of cash, where I told you the money is being used and then deposited at a later stage. Once again, that is fraud. It's a crime, and we don't want to do crime, do we? Absolutely not. And therefore you will see in your question paper you may get internal control with regards to incomes and expenses, and yes, even in paper 2 you need to know your financial indicators. In other words, once again, you will be given the formula sheet for your financial indicators, but you need to know which one refers to which one. In other words, learn your financial indicators. Please, I'm begging you, make sure when you walk into that accounting paper, you know your financial indicators. Okay. Recording and control of fixed assets, including depreciation and asset disposal. We're not going to spend time on that one. We've dealt with it in its entirety in paper 1. However, remember, it will and can appear in paper 2 as well, right? So we're not going to deal with that one in today's lesson. Now we come to inventories. Once again, there's something very important that the grade 12 learner, in fact, any accounting learner needs to know. You get stock methods. Now, your stock methods are perpetual and periodic. Once again, perpetual, you record the cost of sales at the point of sale. When a sale is being recorded, you're also recording the cost of sale, so it's continuous. It has its advantages, it has its disadvantages. Please go through them, check your LTSM, check your notes. You will find the advantages and disadvantages of both the perpetual and the periodic method of stock. So those are stock methods or stock systems. Then you get stock validation. What's that? How do we value our stock? What method do we use to value our stock? In other words, are we using specific identification? Are we using FIFO, first in, first out, right? Are we using weighted average in order to determine the value of stock on hand at the end of your financial period? Grade 12s, you need to know all 3 methods of stock validation. You also need to know which method is most appropriate to the stock item you are dealing with. For example, if you're dealing with selling motor vehicles, right? Obviously, the value of a particular model as opposed to another model would differ significantly, right? If you're talking about a Bentley and if you're talking about a Toyota Corolla, obviously their values, there's a marked difference between the 2 values, right? Okay, so now, clearly you can see that stock item, obviously you will use the specific identification method. So what do? You identify the stock item and say, right, here's the motor vehicle, this is its original cost price, and therefore that's the value of the stock. Then you go to motor vehicle B and you do the same thing. And then you go to C and you do the same thing. So in that way, each item is specifically identified with its own value. Okay, now you come to FIFO. What does it mean? Again, some say FIFO, some say FIFO. What's in it? As long as we understand the concept. First in, first out. In other words, the stock that is coming in first is the stock that is being sold first. First in, first out. Now the secret, guys, to FIFO. What's the secret? The secret to FIFO is bottom up. Listen carefully. I said bottom up. In other words, you start at the bottom of the table because that's the stock that came in last. Obviously, that's the stock that will be sold last. In other words, your unsold stock will be sitting at the bottom end of your table because it came in last. The opening stock and the earlier goods that you bought would obviously be sold and go out first. First in, first out, right? And then we come to weighted average. In weighted average, what are we doing? We're finding the average of the stock that we bought. Remember, you have to take in the values. That means the number, the quantities rather of the stock, as well as the value of the stock, in order to find your weighted average. Okay? Remember, take into account your returns that you may have sent back to your suppliers, or items that may have been stolen. All of that will impact on your calculation. Got it? Okay. And then obviously, we talk about ethical behavior in the financial environments, and obviously that is something that you will, we say, what do we mean by ethics? It means doing the right thing even though nobody's watching you. So yes, you can therefore see that accounting is a life skill. People often ask, why do accounting? It's a life skill. It teaches you honesty, it teaches you integrity, and it teaches you at all times that, remember, do the right thing even if nobody is watching you. Okay, guys, remember, let's look at budgets. We've spoken about it earlier. Let's look at it in more detail. One, when you're doing a budget, you need to know how to draw up a debtors collection schedule, right? Now, the key to your debtors collection schedule is credit sales. In other words, you can only work out a debtors collection schedule if you know exactly what's the value of your credit sales. Please, guys, so the secret here is credit sales. Okay, now you may be given total sales, and you are then expected to work out your percentages. What percentage was cash, what percentage was credit. So, like I said earlier, you need important credit sales. Once you've ascertained your credit sales, you can now go ahead and do your debtors collection schedule, right? Now remember, this is actually revision of grade 11 work. So make sure you know it. So, one is your debtors collection schedule. Number two, your creditors payment schedule, where we are paying our creditors. And here, when you're looking at creditors payment, what is it that you need to start off with? And the important calculation in creditors payment is your cost of sales. Once you've determined your cost of sales, remember, when we're doing this section, we're using what is called base stock. What do we mean by base stock? By base stock, we mean whatever you sell, you will replenish that amount. For example, let me show you in terms of an account. If this is your trading stock account, and you've got a cost of sales of 100,000, right? That means you sold goods to the value of 100,000. You are now going to buy 100,000 rand worth of stock in order to have the same amount of stock that you had at the beginning and at the end. In other words, you buy what you have sold. In that way, you maintain base stock. Okay, now, once you've ascertained your cost of sales, you then split up your cost of sales into the two components. What would it be? Your cash purchases and your credit purchases, right? And once you've got your credit purchases, you can now work out your creditors' payment schedule, right? Makes clear. I hope that's clear, crystal clear. Okay. Then, carrying on with budgets, you now know that you have to do the actual cash budget, broken up into cash items only. In other words, when you're thinking the cash budget, think cash. Which items are there that will not appear in your cash budget? Come on. My director, James, is screaming out the answer because he knows. Depreciation. Why? It's a non-cash item. It will not appear in my cash budget. Think of another one. Drawings of stock will not appear in my cash budget because it's a non-cash item, right? And obviously, bad debts is another one. So these are non-cash items that will not appear in my cash budget. Okay, the emphasis on your exam paper is the analysis and interpretation of the cash budget. Okay? That means you will be given information and you will have to analyze to see whether we have effectively used, because remember, your cash budget is a forecast of receipts and payments. Watch the terminology. I'm emphasizing your cash budget is a forecast of receipts, actual monies that we anticipate to receive, and payments, actual payments that we anticipate, because it's a forecasting tool. We're saying we expect to receive so much cash, we expect to make these payments. So therefore, when you're thinking budgets, think cash. Right. Now, analyze and interpret your cash budget. You are given actual figures and you are given budgeted figures. Clearly you can see you must now make a comparison between the two and say, what happened? We budgeted on a particular item 5,000. That was the budgeted amount. The actual amount was 7,000. Clearly you can see we went over budget. We spent more than we budgeted for. That needs to be investigated. Okay? And it's not always bad. It could be a good reason for that. For example, if this was your telephone and you are told that you budgeted to spend 5,000, but you actually spent 7,000, no further information is given to you. Now you know that there is abuse of the telephone. Why? Because it's going over what you budgeted for. However, if you are told that the company decided to embark on an aggressive telemarketing campaign, and obviously you look at your sales figure to see the impact. If you spend the extra 2,000 in this case here, did it impact on my sales? Yes, it did. So obviously it's not bad. It's a good thing that you did. Although you went over budget, but it impacted positively on the business in that your sales went up drastically because of the telemarketing campaign. Okay? By the same token, grade 12s, you also need to do a projected income statement. Now here, we're talking about income statement. Not receipts and payments, but rather incomes and expenses. You are looking what goes into your income statement, incomes that you have earned and expenses that you have incurred. So remember, totally different now. It's no longer cash items, it's incomes as compared to expenses. Now your depreciation will go into your projected income statement, but the cash loan that you have taken will not appear in your projected income statement. Why? Here you're only dealing with incomes and expenses. So clearly you can see, here again, it is a projected income statement, which means that you are projecting for the future. What will happen with regards, and all of this, people, remember, grade 12s, it's part of control. It's part of ensuring that the business does not experience cash flow problems, that we don't end up making a loss, and therefore it is important for you to be able to analyze and interpret cash budgets as well as projected income statements. Okay, guys? So once again, we went into detail in this section, highlighting for you where you need to emphasize, and once again, past papers, is the secret. Practice, practice, practice makes perfect. Well, we need to go to our ads. We'll see you just now.
Thank you, Ashraf. Guys, we are going to take a quick break, but before we do, don't forget to send us all of your questions and comments on WhatsApp as well as our social media pages. We'll see you straight after this. Welcome back from the break, guys. We are still busy with your exam guide. Thank you so much, Ashraf, and over to you.
We're now going into an actual question for you to see the possible examination types of questions you could be faced with in the exams. Okay, so here goes. We're dealing with manufacturing, and just a reminder that, remember, what makes up prime cost? Prime cost has two components, namely your direct labor plus your direct materials, right? Okay, and then the third component in your production cost statement, obviously, is your factory overheads. Okay, now remember, the format of your production cost statement is important. It's direct materials plus direct labor, which will give you prime cost. You bring in your factory overheads, that will give you production cost for the year. You bring in your work in process at the beginning of the year, minus, so the only item that you're subtracting in your production cost statement is your work in process at the end of the year. And that will give you your total cost of production of finished goods. Clear? Okay. The break-even point. I have yet to see a question paper that does not ask for the break-even point. What does it mean? I have to know it. And therefore, what we've done is we've said, let us look at the question. The question says, provide a calculation to confirm the break-even point for 2019. That means they are expecting you to do a calculation. Now, once again, how do you calculate the break-even point? Let's first understand what is the break-even point. The break-even point is the point at which you are neither making a profit or a loss. In other words, you are breaking even. The moment you go above the break-even point, you are now making a profit. And if you produce below the break-even point, obviously you are making a loss. Ideally, you want to produce well above the break-even point in order to make the maximum possible profit in your factory. Okay, so what do we take here? When you're calculating your break-even point, and at this time, you should be shouting out to me and waving your hands to say, I know the break-even point, I know the break-even point. What is it? It's your total fixed cost. Right, now, what makes up fixed cost? There are two components that make up your fixed cost. In other words, there are 5 in total, right? But 2 of them are fixed and the 3 of them are variable. Let's just explain that so we know the difference between the two. Variable costs are those costs that vary relative to production. It means the more you produce, obviously, the bigger the expense. For example, material. The more you produce, the more material you need. The more you produce, the more labor you need. And obviously, the more you produce, the more would be your selling and distribution cost. So those are your 3 variable costs. Your 2 fixed costs are obviously your factory overheads and your admin cost. That means they do not change. Obviously, there's an anomaly there. We're not talking of specific items. In general, factory overheads is a fixed cost, meaning it doesn't change with the levels of production. Okay, so now we've identified our variables and our fixed. So we take our total fixed cost in rands over your contribution per unit. What is my contribution per unit? Is my selling price per unit minus my variable cost per unit. We're going to look at an example now so we can identify what we're looking for. So there's my information. We're dealing with the chairs, right? So what do I want? I want my total fixed cost. What do I know? Obviously, here's my fixed cost. So I go and I identify my fixed cost, but I'm given the fixed cost, I'm given the fixed cost in units, right? There's my factory overheads, there's my admin cost. So I know what my fixed costs are. I want the price of my fixed costs in rands. I have them in units. So what do? I look at the number of units that were produced. In terms of my chairs, I produced 16,000 units, right? That were produced and sold. Therefore, I will say 16,000 times 96. Where am I getting 96 from? The 76 from my factory overheads and the 20 from my admin cost. So therefore, clearly you can see, to get the rand value, I would take the number of units that were produced, which is the 16,000. So obviously now, we take our calculators and we say, fine, take your 16,000, that's the number of units produced, times the 96, and that will give you a value of 1,536,000. Let's check. There we go. Can you see what I've done? I've taken my 16,000 was the number of units that we produced. Remember, I showed it to you from the question. Times the 96. You know where the 96 came from? It was your fixed cost in terms of factory overheads and your admin cost, and that gave you a value of 1,536,000. So I've got my rand value. Got it? Good. Now, what do? I now divide it. In my denominator, what do I need? I need my contribution per unit. And what is my contribution per unit? Once again, selling price per unit minus variable cost per unit. Let's look at the information. Do I have the information? Yes, I do. My selling price per unit is 390 Rand. There's it. Look, I'm looking at chairs, right? So if my selling price per unit is 390 Rand, so I use the 390 as my selling price per unit, minus my variable cost per unit. Now, the examiners were quite fair here in that they told you here, these are your variable costs. So they made it easy for you. They don't have to do that. They could mix them up, but you need to identify your variable costs. Once again, material, labor, and selling and distribution. Okay, so now what do? I add those three costs. What am I looking at? Remember, I'm working out for 2019. So I take the 165 plus the 90 plus the 50. So it gives me a total variable cost of 305. I don't have to even add it because it's done for me already. Another tip, don't go and add unnecessary information. If you're given the total, use the total that's given to you. Time-saving technique. You want to make sure that you complete your accounting paper in its entirety, not a single blank space on your answer book. Please, guys. Don't let me down. Not a single blank space on your answer book. Okay, so my selling price per unit is 390 minus my variable cost per unit, which is 305. Obviously, you will see that there's it. 390 minus 305 is equal to 85. Obviously, you then take the 1,536,000 divided by 85. Let's do that. 1,536,000 divided by 85, and we get a figure of 1807,6. Obviously, that's 18071. And let us see, can we confirm? Yes, there's my break-even point of 18071. So what have I done? I've calculated my break-even point to be 18071, which confirms that I have done the correct thing in terms of my calculation. Okay, guys, let's go back. And then we are asked in the question to comment on the break-even point and the production levels achieved. Quote figures. Now, this is critical. As an examiner, I can tell you that when somebody asks you to quote figures in an exam paper, it is compulsory. It is imperative. You have to show those figures because marks are allocated to those figures, guys. If you just make a statement and you don't quote the figures, you're not going to get the full marks. Remember, we want the A+. We want to get it as close to the 100, if not 100 out of 100. Why can't you get 100% in accounting? Certainly you can. Okay, now let's look at our responses. We're saying that we produced 16,000 units, right? And the break-even point is 18,071. Clearly you can see, what did we say earlier? We said that if you produce above the break-even point, you're making a profit. And if you produce below the break-even point, you're making a loss. So therefore, clearly you can see you produced 16,000, right? And your break-even is 18,071. Can you see I'm quoting figures in my response? Therefore, you can see that we will be making a loss. Why? Because the break-even is greater than the amount of units that we have produced. Then, if you look at the comparisons, we produced 2071 less than the break-even point, so obviously we're making a loss. Where's the 2071 coming from? It's your 18,071 minus the 16,000. Clearly, you're making a statement and you're quoting figures. That's what we expect you to do in the exams. Right? You will also look at the production levels. Now, if you look at the question, let's see if we can just go to it. If we look at the production, you can see that last year you produced 15,000. This year you produced 16,000. So obviously your production increased, but that's not all. Your break-even point increased from 12,400 to 18,071. So in your responses, watch here. We're saying production increased from 15,000 to 16,000. I showed you that, okay? And then obviously it increased by 1,000 units. But your break-even point increased from 12,400 to 18,071. That means it increased by 5,671 units. So although your production increased, it was only 1,000 units that increased, your level of production increased by 1,000 units. But your break-even point went from 12,400 to 18,071, which is, you can see, an increase of 5,671. Okay, in 2018, obviously, they made a profit on 2,600 units. I hope you understand that. Okay. Then, just what's important for you to note is that when you are doing inventory valuations and calculations, look at the method and look at what is required. Okay, now, in this one here, you were asked to work out specific identification. Obviously, you're going to identify the unit. That's the unit we're talking of. That's the unit we're talking of. Clearly, you can see how much we purchased. We can see how many units we have sold. So when I say, watch what I've done. I've highlighted for you the units. So I'm showing you specific identification. Look at the specific unit to find out how much did I purchase, how much have I sold, and what do I have left over. Guys, in conclusion, what we need to know is that make sure you cover all your sections. It's your recons, bank, debtors, creditors, internal, external, and then obviously your budgets, debtors age analysis, and in that way you will see you have now covered all the possible questions in paper 2. Guys, it means now you have to go back, engage with your question papers, the past papers, because definitely if you do that, you're going to be an accounting shining star. Until next time, be good. Bye-bye.
That's it from us, guys. Thank you so much for joining us. And a big congratulations to all of the winners who will be announced on Facebook. Don't forget to check out our schedule on www.wasametrics.co.za to check when your next subject will be playing. Well then, from me, Luni, Nicolette and Keta, as well as Ashraf, thank you and goodbye.